I want to ask you, what does this mean for markets? Sometimes these are not connected, but the market seems back in its slumber again here in Hong Kong and in Greater China.
Yeah, I think there's a few things that are going on. Clearly, the Chinese equity market has got very negative sentiment towards it. Foreign investors have been leaving. We saw very heavy selling in the China A shares last week.
Yep.
The dollar is strengthening as well, and then we've got results coming up in the next few days. Traditionally, this is actually a weaker month for the Chinese equity markets because the Chinese companies normally they promise well and then disappoint on earnings, whereas in the US they promise quite bad things and then
they'll deliver.
Yeah. So there's always a positive earnings surprise in the US compared to a negative earnings surprise that's happening normally in China. But at the moment, clearly sentiment is very negative. We're looking very closely at this H Financials Index at 12,200, which we think is a very big level for the market there.
Why?
Well, what we've noticed is that, sort of over the last 15 or 16 years, really going back since 2007, every time the H Financials has been there, it's been marked with something significant going on with financials. So 2008, we had the financial crisis. I'm not saying that we're there yet, but even 10, 12, 13, 15, even 2020, we managed to get down to that level. Now, the interesting thing about where the H Financials are positioned at the moment is that if we get down below this sort of 12,000, 12,200 level, the positioning is really very weak. And 2023 is really a year where you need to look at positioning very, very carefully. So all those people who bought from sort of October 31st to the end of December, their positions will now be under threat if there isn't more regulatory action that is forthcoming. So we had this sort of opportunity. We first got down to this level at the end of July. We saw more noises coming from the authorities. The market bounced, and then it seems like the market was disappointed, and we've gone straight back to where we were.
Mo, I want to talk about the impact of the property sector on the economy. Is it at a critical juncture? Is that why we saw the cuts from the PBOC today?
Yes, I think it's not surprising that you are getting measures from the authorities at this level. In fact, this is really what we would expect. The real question is whether it's enough or not, and that goes to your earlier question, is that yes, they've cut 15 basis points off the rate, but the problem, I think, is not really one of liquidity. The problem is, there is no liquidity problem in China. Money supply is growing at something like 11 or 12%. The problem is really whether that money is being used. So in some forms, it's a bit of a liquidity trap, and it needs more measures from the authorities to address issues like confidence.
So when it comes to the property sector, are contagion fears justified? It's not just about Country Garden, it's also about the trust company. There's a lot of concerns there.
It is. They're sort of spreading, but the thing is that, when we had those property concerns in September of 2021, the authorities actually moved quite quickly to ring-fence the financials. So it's interesting because this is something that we do know about. Remember, there is something like $1.2 trillion worth of property debt that is either distressed or vulnerable. I think the problem here is that the market doesn't really know who is going to be left owning this and what the impact is going to be. And so what the investors seem to be doing, even today, we're seeing selling continuing in the banks. What they're doing is they're actually selling first, and then they'll ask questions later. But the consequences of this, whenever there is some sort of financial issue, is always trying to identify who owns the exposure and how they're going to handle that exposure.